All right. How you doing, friends? It is Friday, November 22nd, a little bit past 7. It's actually 7:35 a.m. Eastern Time. And this is the 0 DTE morning market analysis. We do this every single morning to set up our trades. It's a routine, like many of the routines that we practice here. The 0 DTE service actually comprises of two parts. There is a community where they essentially learn the strategy and the process, the methods. It is self-directed. And then there is another community that is a coaching program. And there we teach people how to be consistently profitable, independent, and trade at a professional level. As you may know, I myself was an institutional trader and hedge fund manager, and I'm bringing that experience into the group and coaching and mentoring hundreds and hundreds of students. So let's get to it. What we're doing is we're looking to determine three basic things: the market direction, the volatility, so we can figure out our exposure to that market, right price the options, and the third part is an entry event, or an entry event level. And we do that through an analysis of the market structure using volume profile. But before I get started, I'd like to talk about my P&L and what that generally looks like. On average, I do around anywhere from 25 to as high as 100% per year. This year, I'm on track to do about somewhere around 50%, I'd say. This week was a very typical week. Let me just show you. I'm just showing the first 4 days. And let's see here. All right. So this is the first 4 days. There were 1, 2, 3, 4, 5, 6, 7, 8 trades taken. Of course, we have today. I can't report on today because it hasn't happened yet. And all SPX, except for there was a Tesla trade, I actually put on last week and then took it off this week. Sitting at about $2,000. If today goes well, it should end up around $2,500, I guess. Or if it goes really well, maybe much more. But that represents approximately just under 1% of my total trading capital. The current account that I'm trading with is about $230,000. So I'm looking to make approximately 1%, maybe a little bit more, a little bit less a week, and on a monthly basis, anywhere from about 3% to 7%. That's at least been my average. Now, I'm not promising that to everybody that joins the service. Obviously, I've been doing it for a long time. I'm skilled and have the experience, but that's what I'm hoping to teach people to get to. Not just hoping, it is a guarantee. If they join our mentoring service, they will become professional level traders. All right, now on to the analysis. So we'll start with market direction, and it's been the same all week, down, even though we do have a couple of up days. Now it's interesting, yesterday it was also deemed that we would do a bearish trade, and we actually made money even though the market turned around and went up, because first it went down. And also made money on the big ass fly. So there were two positive trades yesterday. And this morning we do have an opportunity for another big ass fly, and I'll talk about that in a bit. But we're going to start off with a put fly out of the money using our standard asymmetric position, somewhere between 1 to 8 to 1 to 12 risk to reward. All right, so next step is to look at volatility, so we can determine how wide we should make our flies. Now, it hasn't changed very much over the week, and it doesn't usually change that much, but we still go through the routine. And currently we're at 16.8, just at the edge of Zombie Land and Goldilocks zone. Again, our range should be somewhere between 15 and 25. Next step is to look at our big ass fly and see what it's priced at, so we can see what kind of pricing the options market is looking at, and that will tell us what our expected move is, and in turn tell us where on that width range of out of the money flies that we should lie. And that's exactly what this chart is up top here. So we want to look at the debit of the big ass fly. That's what these numbers here represent, this scale from 5 to 34. Those are the limits that I've observed over the past few years. And so if we're on the low side, that means there's high implied volatility. So we're on the high side of our width range. If it's on the high end of the debit, meaning that the fly or premium has accelerated its decay due to the low volatility, and that's why the fly is priced high and less of a trade that we want to take, then we're on the low side of widths. So there's more risk in low volatility. Premium has decayed more quickly, meaning that the risk to reward is poorer and the gamma risk is higher. So let's just check out to see where the big ass fly is. And I have that set up in Thinkorswim. And so the big ass fly is an at the money butterfly. We put it on with the ES prior to market reports coming out so that we can potentially cap, if we're going to put this trade on, if it's on. And today it is on because the price is below 25. That's my limit. We call it an edge case trade. In other words, it's filtered out, making sure that the debit is below 25. And it is. It's at 21.6. So if we go back to our... Now, by the way, that would mean that we would look at this as a trade to put on. We also look at the NQ as another alternative big-ass fly. It has a little bit more volatility in it. Let's take a look at that. Usually we're looking between around 55 to 65 or lower. So let's see what the NQ is giving us this morning. I need to set it up. And there we're looking at 150 wide fly because the NQ is, well, it's 3 times the size of the ES. And so we want to do it on the quarters. So we'll look at a 150 wide fly. So, okay, this is right here. This needs to go down to 25. This one needs to go up. Let's see, 928 to 925. And this one needs to go down to 625. Is that right? I don't know. I always get this screwed up. So let's take a look. Yep, there we go. Let's adjust the dates so they're correct. And this is definitely on for this morning, priced at 45. You can see that it's a good risk to reward here. Extremely wide break-evens, low gamma risk. This is an excellent trade for this morning. All right, let's move on and take a look, go back to our trading views so we can assess the entry opportunities, the entry event, and we do that by looking at the market structure. It's already been marked up. Earlier this week, I talked about marking up and creating market structure using volume profile. Go back to that. I'll do a separate video coming up, and there's plenty of videos in my YouTube that you can explore that talk about how we actually mark up market structure. But market has memory. The structural levels are important. It's where you're going to find liquidity changes in support and resistance. And so because we're bearish today, we're going to be looking for a move that does something like this. Hits one of these structures and then reverses. When it hits one of these and we can confirm that it has found resistance there and may be heading down, that's the event that tells us, okay, we got to put on a trade now. And this is the morning session that's been blocked off from 9:30 to 12:30. That's the most opportune time to do it. So if an event like that happened, then we would put a fly down here, a put fly. So we did something very similar to that yesterday. There were actually 2 events. This one happened too fast in the beginning part of the day, so we missed it. That would have been the best one. Then there was another one that, well, yesterday there was another structural element that I moved that was sitting right here. All right, and that I took the trade right there. I overwrote it later today because we're at all-time highs, so the structure is changing ever so slightly every day, and there was a material event that happened here, and that's where I took the trade, and then it reached to a level of about, I don't know, $700 of profit or something like that, and then not 700, about $500 of profit, and then it backed off. I lost about 30% of it, and so I exited the trade, and it's a good thing because it just kept on going past there. So that was a successful trade, as well as my big ass fly was a successful trade yesterday. So even though the market itself ended up bullish, we were still in a bearish trade, and it did work out. Obviously, if I had been able to capture this move in the very first part of the day, it would have been a much better trade. Well, that remains to be seen. I guess it depends on how far into the day and how fast it went down. But in either case, did very well. And just to show you those two returns for yesterday, so you can have something to hang on. Yesterday was the 21st. So this was the big ass fly. Put it on at 21.20. Exited at 25, made $760. And, I guess yesterday was a losing trade for me. So I was wrong. Put it on at $2, took it off at 25 cents. Typically I let that go to zero, but it didn't make any sense to not grab that additional $25. So it was a $350 loss. Also took off the Tesla trade for $278. So overall, it was an okay day, about a $700 day. All right, we'll go back to the big head. So there you go. We're putting on a out of the money put fly because we're bearish. Doesn't mean the market's not going to go up. But remember, we're 50-50 traders. So, and in the course of a day, the market can go up and down. It's where it ends that I guess ultimately determines whether it was a bullish or bearish day. But in intraday, it could be bearish and then end up bullish. So we just follow that, and the reason why is we trade with the trend, and on average, we get a larger, on average, magnitudinal move in the direction of the trend that we choose. So that's what we're looking for, so that on average, we can take advantage of those big moves and potentially get bigger trades with our asymmetric positioning. So that's why we do it. So anyways, that's it. Thank you very much. I hope you all have a great weekend. Again, that big ass fly is on. If you want to learn more about what we do, go down below in the description. There are links.